Okay, what's crack-a-lackin', everybody? This is I can't wait for it with the Burner Trading Group, and this is part three, the final one of the candlesticks. I know you're just like I can't wait. I know, I just can't wait for him to be done with this series. Show me how I can use these in trading and actually really get in on a trade. So that's what we're going to do today. I'm going to show you some easy ways to identify when to get in and what to look for. And I'm going to start with my favorite one. That means that the rest of the video is going to be downhill from there. And I'm sorry, but I have to start with this one. And you're going to hear us talk about it all the time. You know, me, Pika, TC, Pompey, Tiger, Pirate. I mean, you're going to hear us talking about it. I'm going to say it over and over and over again. And you're going to be like, what is he talking about? But now you know. I'm going to say one leg up. We just need one leg up. And so what one leg up means is when you see price action coming down and it ends for a new lower low. And so at this point right here, it's made a new lower low. And so this would be what I consider one leg down. I want one leg up. And so this right here is more like a one leg up. Um, but so in this instance here, I'm looking at this candle here and this candle here, and this is one leg down. So that resets my, what I'm looking for, and I'm now continuing to look for one leg up. And I see one leg up there. So that is my first opportunity to get in. Price action drops a little bit further, and it stops right here. And of course, if I was to get in on a trade, I would put my stop loss at the bottom of this, this if I was using a stop loss, it would go at the bottom of this here. So before I would even start to worry about whether or not this trade is going to be a bad trade, I would want to see price action drop below this line before I even start to think that. And so price action goes up, I would probably get in right here. My second opportunity to get in, if I missed that, would be right here. Or if I wanted to add to my position, it'd be right here. And so then your next one to get in would be right there. And so if you would notice that on the real one leg up, which would be this one here, because it comes technically a one leg up comes almost about 85-90% of the movement down, maybe 90% of the movement down from of the distance. If it comes up like this, it comes almost 90% of the way back down, but it does not pass this line. Now it can double tap this line and go back up, but it doesn't come past this line. And so if you notice that on a true one leg up, price action doesn't really come back to this point. And if you look right there, there's a real quick one leg up right there. It's two candles over. It's about 90% of the move down. And it's just confirming. So when you look at it, it looks well, not like that. It looks like this. And so as long as there's an angle up, then it's a one leg up. And so like that would be a one leg up. Now this is a one leg down. And you look at it right here, it goes deeper than that right there. Doesn't mean it's always going to go down from there, but I would be skeptical of adding to my position because look what happens. You would have added to your position, yeah, it went up, but maybe you thought it was going to break this high and go even higher, but it didn't. It didn't break that high because it went one leg down right here. And so that was a tell that, hey, price action or, everybody that's on the side of it going up is starting to wane and bears are starting to take control. And yes, bulls are taking control right now and moving it back up, but the sides are starting to wane. And as it starts to change, the bears outweigh the bulls, and it doesn't break that high. And because it doesn't break that high, it immediately starts to dump and go down. And we'll cover more about this right here, this movement later, and why this happens and all that. This is a distribution zone right here, and like I said, we'll cover more about that. That's a whole different rabbit hole that we'll go down on a different video, I promise. But we're gonna get you up to that point so you can understand everything that I'm talking about. Because otherwise, I'll put you in a rabbit hole and I'll leave you there and you'll get lost and you'll never come out. So um, I digress. And so this was a sign saying that the price action is going to start to come down, that the momentum is stopping and it's not going to break that high. And it didn't. It went up once, kind of went up twice, and there's three times right there, and it failed. And so another confirmation that you can look for is the same thing down here, up here. If I'm looking for price action to do one leg up in the reverse, it would look like that. And so there's another one there. Drops, doesn't create a new high, tries again, doesn't create a new high, makes that sign again, that one leg up, drops. So you can use this to get in and out of trades. It is probably the strongest indication of when to get in and when to get out. I technically don't even need to cover anything else because that really, I mean, you'll see it everywhere. You'll see it all the time. And if you just stick to it, there's no reason why you should get into a trade wrong. So I would say that I strongly suggest using higher time frames because you get stronger moves out of it. Dialing in to like a 1 minute time frame isn't really going to help you get a strong move. You know, now if you're just trying to get the best position possible, getting in, at the lowest price possible, whatever, then yeah, you can use it that way and then look for this exact same move, and that'll get you in at the lowest point, the lowest place to get in, or if you're trying to get out of a trade, at the highest point, at the highest place to get out with the most profit. You know, and so that is a great way to get in and out of trades, to add to positions, to start subtracting out of positions. So you start seeing it going in the opposite direction of what you want, you know, and that's where I'm going to end it. Because again, there is really, in my book, there is really nothing stronger than that right there. I'm sure there's a bazillion different things I can show you on how to get in and out of trades, but this is how, big institutional buying decides on how they get in and on trade, you know. And so if they're doing it, who am I to say that, you know, that they're wrong, that there's a better way? So um, that is it. Thanks for tuning in. Hopefully this helped. I hope you get to, use this on finding, some better positions to get in on and making your financial dreams come true. This is I Can't Wait for It. Thanks again, and I'll see you on the next one.